Hello and welcome to Gold and Silver Assets. I'm Diora and it's Sunday the 8th of August 2021. Today I thought we'd have a bit of fun. You know how those women's magazines have quizzes to help you decide your perfect skincare routine or which celebrity you should be dating? Well, these topics aren't really of much interest to me, so I thought, look, why don't I create a quiz to help decide if precious metals is a suitable investment? If you want to participate, go and get yourself a nice drink, and also you're going to need a pen and paper to record your responses, and we'll tot up the results and interpret them at the end. Here we're mainly going to be referring to the physical precious metals, and remember, this isn't meant as investment advice, it's purely to provoke some thoughts here. Well, let the games begin. Question 1. For you personally, is investment income, for example, in the form of dividends or interest, is it A, absolutely necessary for your whole portfolio? Is it B, optional and might only be needed for part of your portfolio? Or is it C, not really necessary? If you want income, then owning physical gold in your possession isn't for you. Now, there are some ways to get income from gold, but that does involve gold leaving your direct possession and you end up with a counterparty. Question 2. What is your investment goal? Are you aiming to A, buy a Lambo? B, are you investing to ensure you maintain a good standard of living during retirement? Or C, are you hoping to build a big pot that can be passed on to future generations in your family? If you're expecting to get big profits fast, precious metals probably aren't the investment for you. There are other asset classes that can offer such possibilities. But for the most part, gold and silver tend to move slowly for a lot of the time. But yeah, you do get intermittent fast moves, but then you have to be very good at timing there. You're highly unlikely to get a 10-bagger in the physical precious metals in the space of a year. Question 3. You find the prospect of a 35% drawdown, A, completely unacceptable. B, you know it could happen, but when it actually does happen, you freak out and capitulate. Or C, you expect it to happen and plan for it, and when it does, you're psychologically prepared and you manage it well. If volatility bothers you, gold and especially silver are probably not suitable investments for you. Volatility in the precious metals can be gut-wrenching and it usually shakes people out. We've had multiple discussions about volatility in previous videos and it's something that I think is really crucial to understand. Question 4. How do you respond when you hear about price manipulation in the precious metals markets? Do you A, feel horrified and decide to stay well out of gold and silver? B, do you blame manipulation for your losses? Or C, do you try and find a way to profit from it? If price manipulation of gold and silver bothers you to the point that you can't cope, you get all hot under the collar and you blame it for your losses, then it's probably best to face up to it. Precious metals probably isn't the investment for you. Question 5. For you, convenience in your finances is A, essential, B, less important than security, or C, less important than privacy. If you absolutely insist on convenience, then owning physical precious metals is probably not for you. If you have an ounce of gold in your hand, right now selling it isn't as fast and straightforward as pressing a few keys on a computer screen. Question 6. Do multi-page contracts make you feel A, safe and secure, B, moderately reassured, or C, do they make you feel sick at the sight of them and give you a headache? If you have faith that contracts that have been drawn up without your input will have your back and will cover you when you need it, then physical precious metals, probably not for you. Question 7. Do you aspire to be A, cooler than everyone else? B, do you want to blend in and be the same as everyone else? Or C, be your individual self? If you want to be perceived as being the coolest person in the room, owning precious metals probably is not going to help that cause. In the Western world, owning precious metals is not really seen as being cool. I think there's this perception of it being owned by people who are old-fashioned, tinfoil wearing hat types, and most people don't own any physical precious metals. Question 8. What are your views on the intrinsic value of your particular fiat currency? Do you A, think it is money? B, think it is based on the faith and trust that the population has in it? Or C, do you think that it's worth less than toilet paper? If you have full faith in your particular fiat currency and in the government that issued it, if you trust that its purchasing power will be retained in the coming years, then gold's not the investment for you. Question 9. Do you think that the trajectory of the society that you live in over the next 5 to 10 years is A, upwards, B, flat, or C, on a downwards trajectory? If you believe that everything is going to be awesome, things are on the up, people will live in great harmony, peace will reign throughout the world, and that the financial system will be stable, then gold isn't the correct investment to be in. And finally, question 10. What do you most value? A, getting free stuff. B, safety at all costs. Or C, freedom in all its forms. If freedom isn't important to you, physical gold is not the investment for you. Now, most people consider freedom at the most superficial level, like, for instance, not being in jail. But I think freedom is much deeper than that, and most people willingly these days seem to give up various forms of freedom in exchange for things like convenience and getting free stuff. Okay, now time to tot up your scores. You can pause the video here while you tot them up, and then we'll go through what the results mean. If you have mostly A's, then investing in gold and silver doesn't really suit your personality, investment goals, or values. Best to look elsewhere. If you have mostly B's, then having physical gold and silver as a small part of your portfolio would be prudent. If you have mostly C's, you're probably someone who has subscribed to this channel, watched all my videos, and repeatedly hit that like button. As I said earlier, this isn't meant to be investment advice. It's really meant to help you understand the reasons that you're investing in precious metals and to allocate your portfolio accordingly. Next up, the market update. Let's start with gold priced in US dollars, and this time it's on the weekly scale. Well, I think the best words to describe the past week as far as the precious metals go is clubbed like a baby seal. Again. Yeah, it was pretty rough, and I think people will have been pretty knocked around by it. But you've always got to stand back and look at the bigger picture. On the monthly scale, it's still very bullish. On the weekly scale, well, here we are. We've got this trend line that we've drawn to join these lows. So we've had 3 touches of that now. Could that break? Yes, it could possibly break. And we're at an important turning point here. And if that breaks, does that mean it's disastrous and we're going to go down to 1500? I don't think so. I think for me, these lows are the important lows here. We don't really want to break those. We've also got support over here, a little bit of support, okay, but also over here. And so we could be at or pretty close to the low. I mean, this was a pretty harsh knockdown here. And so, you know, we've had 2 of those in a row, kind of here and here, really. Are we going to keep getting those? Because I'm not particularly bearish about gold, I don't think we're going to get, you know, a row of red candles coming down here at this stage. But look, arguments could be made for either side. So look, I'm not saying that I know what's going to happen here. And there are arguments for the bearish case from a technical analysis standpoint, certainly. But there's also some positives in terms of the bullish case as well. So I'm going to in today's show, I'm going to talk more about the bullish side than the bearish side, just because of, you know, that's how I'm biased at the moment. But that doesn't mean to say I know that that's going to happen. Okay, further drops are possible, and I think, you know, it could go either way here. So this is one of those situations where there's a lot of uncertainty, and you kind of just have to make your own decisions based on where you are in terms of your portfolio. I mean, if you bought down here, this isn't going to bother you at all. If you bought up here, this is going to be super, super painful. It's going to be gut-wrenching and very demoralizing. So it really depends where you are individually on how you're going to react to this. Okay, so if this were to break, what could be going on? Well, this could break and still maintain this as a low. So what could happen is we could go down here and then go back up. I think if this does break, though, we're going to be getting kind of sideways movements for a while, which is going to be very, very frustrating. But yeah, that is entirely possible. Okay, I think next thing we should do is look at the US dollar, because we were talking about that recently, and that seems to be relevant at the moment to what gold's doing. So last time I'd drawn these parallel channel here, and it's not perfect. I know that we had a breach of that over here, but this is kind of, I've drawn these 2 lows here to see what we get here, and then move the upper channel line to join this high over here, and we get to here. And we've also got this line over here, which is long term a resistance line there. So if you go on the monthly scale and look at my previous videos, you'll see where that's come from. And I was saying that this was a kind of confluence of resistance. Price kind of tried to get up there, it didn't even reach there, and got rejected. It's coming back up again. But I think the dollar's looking weak here still. I think if we broke this high over here, then we've got a different story, and we're looking at a kind of break here, which would mean that we've got a double bottom here, in which case, yeah, much higher values coming over here. But to me, it's just looking weak, and I think we need to see what happens over here and then over here. But personally, I think we could get a little bit further up before we turn around. Let's have a closer look at that by looking on the daily scale. And what happened here was we had this ascending wedge, we had a breakdown, and it kind of got to the level here. before turning around. So that ended up being a bit of support there. And yeah, so we're looking probably potential for it to go to 93. It doesn't have to actually get to that level. It could turn around before then, but that's what I'm thinking. Just a little bit more push up before coming back down again. Who knows, but that's what I'm thinking. If that's the case, then that would be bullish for gold. Let's have a look more closely at that gold chart, but this time on the daily scale. And we'd been talking about this rising wedge over here, and we'd broken down from it. Then we had a retest of that before coming back down. We did have a little bit of a hopeful moment at that point, and so that made me wonder, oh, are we going to move up from here? But nah, that ended up getting smashed down, and we had follow through with that as well. And this was a pretty dramatic drop here. Oh dear. And it actually even dropped through this support area over here. But having said that, this pattern has reached its price target, pretty close to it anyway. The target would be kind of the bottom of this wedge here. So yeah, it's pretty close there, and also pretty close to this long-term trend line that we'd drawn earlier. Also, as we mentioned earlier, we've got some support over here as well. So we're kind of at that point where we could potentially be at or close to a turnaround if we're thinking of the bullish case. The question is this all going to hold? But pattern-wise, you know, this has met this target. And so where do we go from here? Are we going to get a little bit of a bottoming before we move up? Or are we just going to crash straight down through there? That is possible as well. Okay, now this was interesting. Now you remember this, we'd drawn this parabolic chart here, and it was quite a good fit. So this last dot that we'd included in the data was back in March at that low there. So then I thought, oh no, you know, I think I'd said that based on this line, then the low would have to be at 1787 this week. And of course we dropped below that. So then that made me think, oh, well, is this all wrong then? But then I realized, look, you've got to add data points as you go along. I think the problem at the moment is we don't know if we are at a low yet. So if it goes lower, then we'll have to obviously adjust this and put a new data point. But I thought, well, look, what if we assume that we've had another low here and we're going to turn around here? If I were to add the current data point, what would happen to this curve? Now, my assumption was that it will make the fit worse. Okay, so with the last data point, the fit came to 0.9948. A perfect fit is 1. So it's a pretty good fit. And so I added the low for this week. Interesting. So the fit actually improved. So it was 0.9961. So this is the data point that I added for this week. With these curves, what I found is that it's going to be pretty good for the next year or two. But as we go further out, if this really is a parabola, of course, that is an assumption there, then this becomes less and less relevant, and the lows are actually above this line. So in the next couple of years, the R squared will actually go down, and usually it comes down to about 0.97-ish later on. But at this stage, it seems to be reasonable. So I thought that was quite interesting. It actually improved the fit to this new data point. Of course, I'm not going to fix that in yet because we don't know if that's the low. So we'll hold fire on getting too excited on that. But what that tells me is that it's not a disaster at the moment. This parabola theory is still in play. But let's see. We'll just keep a watch on it. And we'll move on to silver in US dollars on the daily scale. And last time we were looking at this wedge, and it had the price had kind of bounced down, hit the bottom of the wedge, and then moved up. And when we had this price action, I was getting quite hopeful. I thought, yeah, look, prices moved up. I think we've broken out of the wedge. And we'd also seen this breakout from that RSI. So I thought, maybe we're on the way up here. But price never closed above that wedge. That was quite an interesting thing there. It just got smashed down. So this wedge, does it mean it's invalid? Not necessarily, because remember, we never closed above it. And we haven't closed below it either. We're right on it, of course, yeah. And yeah, look, this can break out downwards. And in terms of RSI, we're right on that bottom trend line as well. I don't know how useful this RSI thing is. Obviously, that ended up being incorrect there as well. So I don't know, RSI I'm not a huge fan of. I look at it now and then, but I just find it very, very unreliable. But the thing to note is that we're kind of getting towards that over sold kind of level here. I mean, it can go further down here. So, and that's the problem with RSI. It's very, very fluffy, I find. So yeah, if we really would need to see a turnaround very early next week, if this was still to remain a bullish pattern. Can we go further down? Look, there is supposed to be some support in around this price range, but that doesn't mean it's going to hold. And I think what we're looking for is for this low to hold. At the moment, we've got a higher low, and really we want that to be maintained. If we go below that, I think we're looking at potentially lower prices there, which will be a pain, won't it? Yeah. But yeah, there's still hope. Let's see. Let's see. Looking at the GDX, so this is the gold miners on the daily scale. And I'd kind of keep changing the pattern here. Previously, I had this as a straight line across here. And so this is a kind of descending, broadening wedge. But then I thought, look, what if we join these two prices here? And that came out with this line. It hasn't quite touched that line, though, before turning around. And we've had a big gap over here. This was quite an exuberant sell-off there, wasn't it? But interestingly, you know, look, we're at the stage now where we've got a lot of gaps above us. We've got another big one there that hasn't closed. We've got one over here. And this is a huge one over here. This is a huge one. Of course, we do have some gaps below. There's one at about 26.70 that's reasonable size. But these are all on the daily scale. On the weekly scale, I can't really see any gaps below. Also, these aren't gaps on the weekly scale either, the ones above. But if this is a broadening formation, this can be a bottoming formation as well. Sometimes it's a continuation as well, though. So again, it can go either way. So what you're looking for is that what you don't want to see is a break of this over here, which is just above the 32 level. It's probably about 32.50-ish. So yeah, that potentially this could go down a little bit more before turning around, and then this could move up and go much higher, because we haven't had 3 touches of this one yet. But then again, we haven't had 3 touches of this either. Let's see. I mean, we do have long-term support around this 31 level as well. But yeah, it's tricky. It's tricky. But I don't know. Let's see if this pattern is the correct pattern that I've drawn. As you can see, you know, when you look, a lot of people talk about the retrospective things that worked. And it's only when you look at things prospectively and see how things can change as you go forwards. That's really when you kind of understand things a lot more, I find. And more importantly, you can actually see the flaws in a lot of these techniques. And so that's what I'm trying to do here. I'm trying lots of different things out, seeing what works, seeing what's wrong with certain techniques. I think every single technique has a flaw. There's no such thing as a perfect one. And it's just kind of sifting through using different things at different times, I guess. Okay, and then finally we've got the junior silver miners, and we've broken this long-term trend line over here. We broke through that, we bounced up. So again, things were looking a little bit more hopeful, but we just couldn't hold that level, and it's dropped back down again. And last week I was talking about this gap that I thought needed to close over here, which it did do. And the question is, are we going to go lower from here? Of course, you know, we are in a short-term downtrend. And so unless we get a higher low, we have to assume that trend will continue. So we don't know yet if this is a higher low or not. We certainly haven't had any higher highs yet in this time frame. On this longer time frame of a year, we're actually just moving sideways. So it's not necessarily bearish if you think about it. It's only if we make a low, I guess below here and here, really, that's when you can start saying that we've got a bearish kind of pattern, really, I guess. So at the moment we're still in a sideways movement here, which again goes with that idea that we're neither bearish nor bullish here, and things can still turn around and move to the upside. Okay, and the other interesting thing to note is that although the silver price got smashed, the miners didn't get smashed nearly as badly over here, did they? And so again, that gives us a little bit of hope as well. So look, I've tried to kind of push the optimistic kind of aspects of this, but remember, there are arguments for the other side here. So this is one of those times where it could go either way. Not sure what's going on here. We just have to watch and let the market tell us what it wants to tell us. Anyway, sentiment is pretty low, so that's again another positive thing as well. And the other thing that I wanted to say was it's really important to remember times like this, because let's say prices do turn around and they rocket upwards and everyone gets excited, huge profits are being made and so on. That's when you've got to remember times like this, because when prices are going up, it's very easy to say, oh no, price is never going to go down to that level again. And because I remember that was happening when the gold price was like over $2,000 and, you know, the miners were going up, and it was hard to imagine prices going back to 1700, but they did. And so you just got to really remember times like this so that you're more wary when prices are going up, and so you don't get completely kneecapped at that. Anything is possible. Well, not anything, but almost anything is possible. So don't rule out big price drops when prices are going up. Okay, that's it from me. Hope you enjoyed the show. If you did, press the like button. And if you're new here, do subscribe. We'd love to see you here again. I've been really enjoying the comments. We've got a really good bunch of people. We seem to have got rid of all the trolls as well. Maybe that's a sign that we're close to the bottom. I don't know. Anyway, that's it from this week. Me from this week. See you next week. Bye.